I didn't know you guys were here. It must be another Forex Friday. Let's get right into it. What's up, guys? Welcome back to another Forex Friday. If you're new here, my name is Matt L, and on every Friday we go over the trades that I took this week, what I learned, and maybe a couple of things to look out for next week. So let's get right into it. So this week was a pretty quiet week. It looks like the market overall is waiting for CPI figures that are coming out next week from the States to see how inflation is going, whether it's going to run hotter than expected, if the Fed's gonna have to react sooner than expected, and all of those good things. So it was a pretty quiet week, but there were a couple of things that we're gonna go over. On Monday, there was a long on Euro New Zealand that I was looking to take that just missed, but it did quite a few pips. So we'll go over the chart there as to why I was looking to take it. On Wednesday, I did manage to get into a pound Aussie short. I had a pending that was just missed as well, but I watched the price action, I got in live, and that turned out to be pretty solid. So we're gonna go into the charts. I'm gonna show you the trades that I took, the ones that were missed, and hopefully together we can learn a thing or two. Let's do it. So the first trade that I wanna go over is a buy on Euro New Zealand that was missed early on this week. I believe it was Tuesday. So I was looking to enter on this green box right here, and the confluences were a 38 fib, this trend line, a third touch, along with the 50 and the 100 4-hour moving averages. So as you can see, it just missed before moving higher. It actually hit the 1.69 level, so that acted as a round number psychological level that the market reacted to. I knew that there was a risk of this happening, but I wanted to have a tighter stop loss, and I was willing to miss the trade. So for those reasons, I didn't move the order up higher. So that was missed. What happened was we did get this little bounce, and since the screenshot, you can't see what happened afterwards, but we did come lower down to the 38, and it did react to it. So I could have kept the pending, but it was much higher risk having come within 10 pips. So this was the first trade of the week that was missed, but it would have worked out if we got triggered. So the second trade this week was a short on pound Australian, which also was missed, but I did manage to get watching the price action. So what I was looking for was to get in around 1.83165, and the reason for that was we had this key level trend line that was coming across. On top of that, we had the 38 fib from the high, as well as the 200 and the 100 moving average on the 4-hour charts. So there was a good amount of confluence, and I'm expecting for the medium to long term a bullish Australian dollar as well as a strong New Zealand dollar. Just with global economies reopening up, there's really been a risk on sentiment that has driven antipodes to strengthen the last few months. So I'm expecting that to continue. So the pair dropped because of that. We ended up getting a bounce on this trend line, and it moved up higher, back up to our entry. My over ambitious profit target that you see drawn here, I wasn't necessarily expecting it to hit that level 100%. So we did get a bounce from there, but this worked for a good 200 or so pips. Now on Thursday, we had two trades that were missed just slightly. It was both Euro Aussie and Euro New Zealand. First one that we have here is Euro Aussie, which was a 61 fib, a trend line third touch, and a key level. Key level was 1.57, so it also acted as a psychological level. So as you can see here, with this price action here, we came super close to just hitting my pending, and then the pair moved up higher. I think this was roughly 30 pips or so. So I ended up canceling the pending. It actually came back down, and it would have triggered. I canceled my pending, but the market continued to act from that level. So again, it's one of those that I could have kept, but for me, the risk was just not worth it. But the tech was pretty clean here. As you can see, again, it was just a 61 fib, a trend line third touch. So that was why I wanted to take that. And I actually want to show you a setup that I did take that looks like it's going to be a loser on gold today. I'm going to take a buy on gold today around the 1890 area, which was a 38 fib from this low to this high. We also had this kind of sketchy trend line, but I thought it might be able to react to it. But more importantly, we had the 50 and the 100 moving averages that were going to be retested. And so I thought that would act as a strong support on lower time frames. There were also a cluster of moving averages. So I was expecting a bounce from this area, but as you can see, we broke through it. So that's a trade that I'll most likely be closing to end the week. Now, as I mentioned on Twitter, the link will be in the bio. I mentioned this week that market's been really slow and it's been basically a non-event this week because the market is waiting for the FOMC minutes that are coming out next week. That the market is waiting to see how the Fed is going to react to the CPI data that came out this week, slightly higher than expected. Personally, I think that it wasn't high enough for the Fed to have to hike rates sooner than what's expected. So US dollar most likely will just continue to trend downwards. But so that's why it's been quiet this week. The market is just waiting to see what happens. So I think next week will be more exciting and hopefully we'll be able to catch a few more trades. So let me know in the comment section how you guys did this week. And with all of that being said, I will see you in the next video. Peace.